Hi everyone, this is Bag of Dawn at StockMarketCaddy.com. It is February 6th at about 7:20 p.m. and I want to review with folks a number of other trades that we have made public to the Twitter sphere over the last 2 to 3 weeks and review what we did and why and where we are with them. We're going to be using the point and figure format. And let me just mention too, folks, we are not a broker, excuse me, a financial planner. We are a private party, and we are an educational site. We like to teach like-minded folks how to trade the markets and what we have learned. We're not making recommendations to buy or sell anything or specific entries. We're more about teaching you the technique by example. And you'll even notice on our website, which was developed long before there was a Twitter sphere, long before Bernanke, we don't even have any advertisements. This really is a labor of love. So we hope you enjoy it. We're a husband and wife team. We trade our own portfolio for a living, and we're all about risk management. I do want to just show you, if you come as you're watching the point and figure, if you're not familiar with point and figure, if you come to our pro shop and come to the bottom, I'm going to show you right here, we do have a 90-minute point and figure video instruction. It is $125. It runs, we advertise 90 minutes. It runs closer to 2 hours. There is also a great book on Amazon by a Mr. Dorsey. We own his book. We recommend his book. We have no affiliation. But what we do in the DVD is to show you how we trade the point and figure, what the most probable setups and why, and how you go about finding them. All right, but enough said on that. Let's get started. The first stock that we want to take a look at is a stock that we pointed out to our followers on both StockTwits and Twitter. You can go back and look at the tweets. I'll have some of the dates on a lot of these. I'm not sure. This one was back in December, and it was none other than Lululemon. Say that 10 times. I think they have a great product. I guess had some issues. It really doesn't matter. And one of the beauties of point and figure is the entries are precise. 10 people can look at this chart, and if you're schooled in point and figure, the entry is $65 on this particular chart. $65. And that's exactly where we shorted it, and for no other reason than we just didn't want to be too greedy. We did cover half of our position down here around 46, and we're going to let the other half run. If you're long this stock, I don't know what to say. If you're short, we're holding this. We think this thing could be going much, much lower. Let's look at the next one. The second opportunity that we had highlighted is that we had gone long LifePoint Hospitals. This was back on January 7th, and we went long at 55. And she has reversed on us, and if she closes at 50, we will stop out. So that potentially could be a loss. We're underwater, but we're hanging in there with LifePoint long as of right now. With Netflix, we shorted Netflix on January 7th at 348 on a sell signal. We were able to ride Netflix down to 320 thereabouts, and we opted before earnings. We wanted to purchase a protective call. We had wanted to stay short, but the call was too expensive, and we exited the trade for 20 some odd points. Now, Michael Kors is an interesting one. We also shorted Michael Kors on January 7th at $79.95, and it was right on the point and figure chart right here. Now we had good profits coming down. We opted to hold Michael Kors right up into their earnings call, and they counted us back very close to where we had shorted the stock. In this instance, We did purchase the protective call, and it was a good thing that we did, and she has broken out. We still think that Michael Kors is going to form a high side triangle that very well could continue to break down. So our protective call, which is out to February 22nd, is doing what it's doing. We're underwater just a little bit, and we're going to see how this develops. And if she breaks down and generates a sell signal, we will kill our protective call, have a short position with a much higher cost basis, and try to ride her down still. So we haven't given up on that. Although the chart on a point and figure is, and which is good for them, is bullish. If it comes to pass that Michael Kors doesn't generate a sell signal by February 22nd, we will exit our call and also exit our short with a relatively small loss. Also on January 7th, we went long on the breakout at approximately 138 on Charter Communications. The market really hasn't cooperated, but we have not hit our stop. Our stop would be approximately 130, so we continue to hold this long, and the fact that she's held up in the face of this market retrenchment tells us that we still think that we can go higher with Charter Communications. With CarMax, KMX, on January 8th, we shorted at 45.01 in this area. She has reversed, has not generated a buy. We will hold and continue to hold this short. On FedEx, on January 15th, we had a high, what we call a high pull warning on FedEx. We shorted FedEx on January 15th at 142.12, and we covered half of our position at approximately 132, and we continue to hold the other half short, and will continue until she either generates another buy signal, or if she generates another sell, we will add the other half back on. Folks, by the way, I'm not calculating the percentages. I'm just telling you, precisely where we went in, where we went out, and I'll let you all, if anyone wants to dig in. But you can collect points in a hurry using point and figure. You just got to be patient and know precisely what you're looking for. On January 16th, we shorted Canadian Pacific. We shorted at 146.92. 146.92 was in this vicinity. We did get a run down to 140. We covered half of our position, and we hold the other half still short. We still think there's much room for Canadian Pacific to pull down. This is Hess. On January 16th, we tweeted out a short at 77.19, and we continue to hold that short. The beauty of the point and figure, again, the entries are precise, the exits are precise. Although we let everyone, there's nothing wrong with taking a profit. You want to take your bread, you take your bread. You just got to be patient and let the setups come to you, and the market presents them when they present them. But it really does take out all of the noise. You can notice I'm not using MACD, I'm not using volume, I'm not using time. It is what it is with point and figure. Let's look at the next. Okay, this was a nice one. We shorted on January 16th, also OII, and we shorted it at 75.16. Y'all can check the tweet if you like, but at 75.16, just as she broke what we call a triple bottom break, and she had a beautiful rundown. She reversed. We covered half of the position. We continue to hold the other half until she generates another sell, in which case we'll add back the half, or if she generates a buy, we'll cover the trade. This is CBST, and it was on January 16th that we went long at 69.58 on the breakout. We rode it up. We got a very nice move. We sold half on the pullback, which was around 73, and then we waited, and then we closed out the other half. So we made a little bit of money, but we're out. And that's the other nice thing about point and figure, is as long as you respect the entries and the exits, it's all about keeping your losses to a minimum, and there's very little discretion here. So we didn't get the big hit, but we didn't also get the big hit loss either. Let's look at the next one. Okay, this is MasterCard split adjusted 10 for 1. We had a high pull warning. We love these high pulls, and then what we do is as soon as she reverses, we got short. We got short around January 16th, and I think it was around split adjusted around 810, may have been a little bit higher. And we got a beautiful rundown. We covered half of the position, and now with the rest of the half, we're just waiting either for another breakdown or a rally up, in which time we'll cover. Now this is Amazon, and if you had looked at our tweets, we actually started building a short position. You get so that you get experience with a point and figure, and although in the beginning we ask you just to respect the hard fast rules, but we could see a major top up here forming, and you can see it here at 404, 408. So we began to amass a short position around 400 with a stop above 410. We used protective calls. We even got this drawdown, got through the earnings season just fine, and then we had this beautiful break. That's almost 60 points, folks. On the reversal here, we covered half, and now we're going to let the other half run for as long as that's going to run. So that worked out really, really nice. This is Buffalo Wild Wings. We just did this just the other day, and I'll look at point and figures just before earnings and use our education, our techniques, and what we could see was major resistance at 144, 145. And we had already shown a breakdown in price, so we purchased two puts at 145 on the day of earnings. It cost us, I think, $1,600, and we doubled our money, more than doubled our money on that breakdown. Beautiful break. We covered one put, and we're going to see where the other one works out. This was Twitter. Once again, we used options in front of earnings. We had a huge triangle, showed some weakness to us, and we just didn't think there was much chance that she could challenge this resistance. We opted to the downside and paid. With our puts, we doubled our money. We do these types of trades in and around earnings using options, which we review in our DVD, how we go about structuring those. And then we just had tonight, this is going to be interesting how this plays out tomorrow. This was LinkedIn before earnings. We let it run up. This was before earnings. She was trying to do a breakout. We thought we had weakness here, and she was showing weakness. We thought this was a false break topside. We shorted the stock at we were able to get, I think it was 224, 225. We bought a protective call, which was expensive, for just tomorrow. And the stock now has missed earnings, and we project that the stock is going to be down in here in the next day or so. So we'll lose on a protective call, but it protected our losses, helped us define the risk, and we should make a nice dollar, particularly if she breaks this trend line. Once again, folks, if you want to learn more about how to use point and figure, how we go about doing it, how to find the setups, how to structure it, again, the beauty of point and figure, it's simple, it's precise, the entries and exits are precise. 10 people can look at it, 10 people who have been schooled in it properly. It is what it is. There's no subjectivity. I think everyone should start with point and figure and then gravitate to the other things. We used to do this on graph paper years ago without dating myself. Alrighty, good luck, folks, and tune us in Sunday night for our algorithmic view of the markets. And also too, on January 6th, we have a video on YouTube. You can subscribe, but on YouTube, listen to what we had to say about the markets on January 6th, if that would have helped you. Good Good luck.